Well, let me also welcome on board Dipan Mehta and find out what he's making of the market right now. Dipan, hi, morning. Good to have you on the show. And clearly what's hot right now is the RBI messaging to NBFCs, which seems pretty clear with the kind of consecutive cases that we've had come up. First, it was IIFL, now JM Financials, that compliance clearly is priority.
Good morning, and thank you for having me on your show. And this is not the first time. I think earlier few months ago, they had tightened the screws in terms of lending standards as well. So I think that clearly RBI is getting a bit concerned about what is happening in the NBFC industry, and not only do they want to ensure compliance, but also the fact that they are lending responsibly, because the kind of growth rates which we are seeing in the NBFC loan book, there are chances that the managements, they may get overzealous and lend in a non-conservative way, which therefore leads to NPAs 2 3 years down the line, or even a year down the line or so. So I think because of the competitive intensity, I think NBFCs may have been forced to perhaps find shortcuts here and there. But I think RBI is doing the right thing by clamping down and ensuring that there is complete compliance and little bit of flexibility, or I would say level playing field is then therefore with the banks, so that there is a great deal of discipline in the entire industry.
Okay, fair enough. A great deal of discipline and perhaps a move that will be much needed. But in the meantime, wanted to get in your thoughts as well, Dipan, as to how you're looking at is Zomato as well in trade. The fact that now we're looking at Anfin selling shares in the counter. How have you traced the journey of Zomato? Any thoughts?
Yeah, I think that private equity investors who bought Zomato before the IPO, at the IPO, have been continuously selling from time to time, and yet the stock has been moving up steadily. And in fact, it's, I would say, amongst the new generation listings, it's amongst the best performer. And that's largely to do with the performance. I think that by and large, they're stuck to their strategy, and there's a great deal of better understanding of the company as well, especially on the quick commerce side, that's Blinkit. There were many concerns over there, but steady communication and gradual improvement in the metrics over there have led to lesser concerns and lesser risk as far as that particular division is concerned. And of course, the food aggregation business, the food tech business, is going from strength to strength. So from that point of view, I think a day is not far, a quarter is not far, where uh, Zomato will be solidly in the black. And these are companies, which can have longevity when it comes to growth, and steadily increasing profit margins also because of operating leverage. So while the valuations look expensive on maybe trailing 12-month or current year or next year or so, but earnings will surprise on the upside. And at some point of time, you will find that the stock is attractive when it comes to maybe 2 3 years down the line, if you see what the profitability can be.
Uh, Dipen, which are some 2 3 stocks you're happy to own them for 3 years? You will not change your mind irrespective of what will happen at what will happen at a macro level, which is interest rates, inflation, flows, risk appetite. You're happy to own these businesses for 2 3 years.
Disclosures, Nikunj, of course. First, what comes to mind is Larsen& Toubro. I think that it's on a solid wicket, and irrespective of macros, and even irrespective of whatever happens in the elections, India needs more infrastructure, and Larsen& Toubro certainly is one company which can provide that. What is more impressive is the global forays, and we are seeing increased investment in the Middle East, so that also benefits L&T. Second company which comes to mind is Interglobe Aviation, Indigo. I think the entire airline space has taken off and now is only gaining altitude. And they would have a bit of an issue in the next 2 3 quarters because of a lot of grounding of planes. But then eventually capacity will start to kick in towards end of next fiscal, and that way they'll be able to increase their volumes. And hopefully, I think if oil prices remain stable, then they'll be able to extract the maximum in terms of bottom line. And the third stock which comes to mind, I think, is Bajaj Finance. Again, the disclosure, we and our clients are invested. We have seen that the valuation ratios of Bajaj Finance have been gradually shrinking, because of which it has been a big underperformer. But still, I think the company can grow at 18 to 20% bottom line. And even if the price to earnings, price to books remains stable at these levels, I think 18 to 20% appreciation in stock price, I'll take with both hands any day.
You're giving me nifty stocks. How about any non-nifty ideas?
Kunja, actually, right now the focus is on large cap stocks, and a lot of our portfolios are tilted towards large cap stocks. So, I've been a bit cautious on the market, and there's a lot of froth in mid cap stocks. Quality businesses are going at very expensive valuations. When I look around and I find a company which can grow sustainably at 15, 16 or 17%, it's easily trading at 50 times plus trading 12 months. So from that point of view, I don't want to, look at any companies from even a longer term perspective. I think 25, 30% correction and whole host of mid cap ideas also will come through. Right now, I think investors need to, really assess the risk return profile of their portfolios and make sure that their portfolios are such that in the event of there being a correction, the damage will be minimal.
Dipan Mehta, would you agree with me?
Yeah, absolutely. I think, you really put it exceptionally well, and I was just listening to you intently. And this is what keeps India different from a lot of other large economies, the way the RBI is managing the entire lending landscape. And therefore, we hopefully there'll not be any of those kind of issues we had in 2008 in US and rest of the world as well. So I think they're doing a great job. And it's right for them to keep on having more curves on lending in order to ensure that there's discipline, and more importantly that there's responsible lending, because that's not good for the society, it's not good for the banking sector. And whenever problems come in the banking sector, then quickly they percolate to the real economy, and that has a total effect on jobs, on growth, on corporate profits. So I think it's a step in the right direction, and some of the policies put in place in terms of lending standards, in terms of what percentage they can lend against a particular asset. I think these are really, I would say, path breaking in a way, and ensure safety for the entire system.
A lot of other stocks which are going to be in focus today outside of course, JM Financials, which we're going to be tracking. There's Samvardhana Motherson as well. It seems that the promoter, Sumitomo Wiring, will be selling that near about 4.5% stake via block today. So look out for what that stock does. Zomato as well, wherein Ant Financial's Singapore Holdings is likely to sell a 2% stake. Couple of these block deals which we are anticipating today. And then, of course, Aavas Financiers is one stock we've been talking about. There was that 12% block deal that transpired in Aavas Financiers yesterday. And Amansa Holdings has actually bought a sizable chunk in that block yesterday. So let's see what that stock does today. There's also Havells. They're planning to expand into now kitchen appliances, or expand further, I should say. And then, of course, there is a note coming in from Morgan Stanley on Grasim, wherein they maintain their overweight. They've upped the target price as well. So that's going to be another stock on our radars too. But Dipan, before we let you go, just wanted to understand, I mean, tactically, would you say that this is a buyer's market? Many are anticipating some volatility within mid and small caps, advising caution right now. So would you say just wait it out, sit on your holdings, but don't buy anything afresh in this market right now?
You summarize it really well for me. Maybe you should be on this side, because really I'm getting a bit cautious as far as the markets are concerned. And we are analyzing company after company after company. And there are great companies in India, fantastic businesses, but the valuations are not, I would say, attractive. It's not that they are fair also, they are overvalued. And I have made the mistake of buying a good quality business at overvaluation. And 2-3 years down the line also, it doesn't really make any great returns. And in the interim, if something goes wrong, then you are in for a steep correction as well. So I think keeping cash in the portfolio just now is strategic. It may not get you any returns, but if there's a correction, 10-15% or so, and corrections will keep on happening now, 6 months, 1 year, we don't know. That strategic cash will ensure that the returns for the next 3 years after that are excellent, because you will be investing at the right price points.
Hey, Dipan, good to have you on the show, and good speaking with you as always.
Thank you.